All right, I'm going to take a look at the metals again in this report. I'm going to show you what's happening to traders, especially novice traders, maybe people that haven't learned how to control their emotions yet. So coming out of this bottom, this is the mining stocks, the ETF, GDX. This was a 36% move in just a little over a month. That's a huge move. We've gotten stretched quite far above the 200-day moving average, and now we're turning sideways. And when you get a move like this, then recency bias comes into play. Traders that, inexperienced traders, they assume that this is, because it's done this, they assume that it's just going to, continue to run. And generally, what has to happen and what is happening is after a big move, then you have a period of consolidation before the next big move can unfold. And that's what's happening. And I'm watching like the comment section of the premium newsletter. People are starting to get frustrated again. They became very comfortable with this big trending move, and they wanted it to just continue for the foreseeable future. And that's just not how markets generally work. You get a big move, and then you have a period of exhaustion and a consolidation period, and then about the time everybody gets frustrated again and is ready to give up, then you'll have another big move. So we've been almost a month churning sideways here, and let me show you the problem. This is gold. The all-time high was at about 290, so right about in here somewhere. We almost tagged it with this move. The banking cartel is going to fight this tooth and nail to keep gold from breaking out above those all-time highs. So that's the problem. The miners and silver aren't really going to start another big leg up until gold can break the suppression and break out to new highs, and we get some kind of a sustained move above those all-time highs. Now let me back the chart out and show you we've kind of got the same problem in gold. So the cartel is getting a little help right here. Let me show you what I mean. So when we're looking at the bigger picture here, you can get a better a clearer view of how stretched price is getting above this 200-day moving average. And when price gets stretched too far to the upside or the downside, you tend to, at some point, you get a regression event. So I suspect what's going to happen is we're going to have to churn sideways, maybe for several more weeks, a couple more weeks at least, maybe, before we can break out above this. And then once we do, we'll have consolidated for probably going to be 6 to 7 weeks churning sideways, not really making any progress, and frustrating gold bulls that want the market to go up immediately. They want a repeat of this, and they want it in a big hurry. And the market's just not going to give it to them. The banking cartel is going to fight to try and block gold from getting above these all-time highs. And so it's going to take some sideways churning, this moving average, give it a little time to catch up a little bit more to price. And then I suspect what's going to happen is we'll get a breakout. The breakout will probably, I would say, max 2200, maybe 2250, and then we're going to have to come all the way back down and retest the breakout, and maybe drop back below it. So it'll look like a false breakout. It won't be. It'll just be an intermediate decline. But I suspect that's what's going to happen. The first part of this second daily cycle, I think this second daily cycle, is going to be mostly a sideways churn to get people frustrated The cartel, as I said, the cartel is going to fight and fight to keep this from breaking out above these all-time highs at about 2090. And then when it finally does break out above there, we'll get a big quick move that'll catch, all the frustrated traders. They will be on the sideline again. It'll catch them by surprise when it happens, and they'll miss most of the move, and they'll get in at in the last week and a half of the move, because of fear of missing out at that point, and then they'll get caught at that top, and they'll get dragged down into the intermediate correction that comes back down to retest this breakout. Or, like I said, I think there's probably a good chance that we will come back below that breakout and bottom below that. And the problem will be that price will just be stretched way too far above this 200-day moving average. Too many people will be buying too late in the move, so you got a lot of chasers. A lot of chasers late in the move means you have a lot of stops to hit on the way down, and that's why these kind of moves, these almost parabolic moves, it's why they tend to correct severely, simply because there's just a lot of people buying late, a lot of people chasing, and so you're triggering a lot of stops on the way down. I think that's probably what gold is setting up to do here. We've probably got a couple more weeks churning, and then we'll get the breakout. We'll get it with, almost nobody will be on board at that point. They will have gotten completely frustrated with gold because it didn't do what they wanted to do quick enough, and they'll be on the sidelines when the breakout occurs. They'll miss most of that move to wherever we go to, 2200, 2250. They'll buy right as we're getting close to that top, and then they'll get dragged down into the intermediate cycle low. This is going to be a tricky intermediate cycle. Let me go back to the miners again. So, a lot of people got frustrated by this severe move down into this intermediate cycle low in the miners and silver, and so they were too jumpy and twitchy on their trigger finger, trying to take profits quick. They were afraid that the move was going to fade away, and so they couldn't just buy and hold on. So a lot of people didn't make a whole lot out of this move here. And about the time they became really confident up in here, now we're stuck in this sideways move. And so they probably missed a lot of this. Now they're getting frustrated, and then they're going to be on the sidelines when the next strong move begins. But we're getting late in this intermediate cycle, so that strong move is probably only going to last maybe only a couple weeks. So if you're not in when the move starts, and you're waiting for some confirmation, you're probably, what you're doing is you're probably guaranteeing you're going to buy in here at the top. Now, it's not going to look like this. This was a move into an 8-year cycle low, but it very well could look like this. So we could, let's say we chop around here, and maybe even into the latter part of May, and then we break out and we get this big move, possibly up to this resistance zone right here, and it occurs really quickly, like within a couple of weeks. So if you weren't already in, then you missed the move, and people will be buying up in here, and you can see the problem when you back out your charts. You can see the problem if you're buying up here. It's just, price is just way too far above this 200-day moving average. And so you get a lot of people chasing this move, so that when the profit taking starts, you're triggering stops all the way down, triggering stops. And I suspect we're going to come all the way back down and test this consolidation zone again during the intermediate cycle low. And then the next intermediate cycle, I think, is the one where we can really get some strong momentum. Maybe we won't have to deal with this midpoint consolidation during the next intermediate cycle. But I think this intermediate cycle is going to be tricky. It's already starting to be tricky. The force of this initial move caught a lot of people off guard. They were trying to trade this, and this is not a move to trade. This is one to just hold on. And then now we're in the consolidation phase. This is not a phase where you want to get frustrated. This is a phase where at some point you just want to be fully invested and prepared for when the breakout comes, because it's probably not going to last too long. And then you want to ideally, once we get near some kind of a resistance zone, because we're probably going to be through resistance on gold, so there won't be a resistance zone on gold, but there will be in miners and silver. And so, when we near one of these resistance zones, that's probably where you want to be locking up your profits and getting on the sideline and avoid this correction back down here. And then somewhere down in here, that's your buying opportunity for the intermediate cycle that I think it will be a really powerful intermediate cycle, and it may not even have one of these consolidation phases in the middle of it.